What's up, guys? This is Chris. Google stock, aka Google McDougal, aka Googly Doogly, just reported their Q1 2021 earnings, and holy moly, it was a really awesome beat. If you're in Google stock, GOOG, congratulations. That was a great quarter. So we're gonna go over the numbers and the trends and why these earnings specifically were so important for the stock market overall. And then we're gonna discuss my $3,000 price target on Google stock. So if you're excited for this, make sure to subscribe and like the video. So earlier this year when Google reported their Q4 earnings, they already did a really amazing beat. They did $22 of EPS when analysts were expecting in the 15s, which they did also for this quarter. And they obviously beat very handily, and the stock price has since gone up a lot since then. It's been one of the best performing FANG stocks of 2021, and a lot of people were banking on Google to continue this trend. Wanted to see where some stay-at-home and work-from-home trends were going forward in 2021, whether or not that strength is going to continue, but also we want to see how recovery plays into Google, because Google is also leveraged when it comes to recovery as far as travel demand and entertainment, to think that people search for in Google search. And advertisers want to start to pay for advertising once again, when in past year in 2020, a lot of people cut back their advertising budget because guess what? People ain't going outside and having a blast if there's a lot of COVID going around. But with, we're seeing trends where travel numbers are back up. If you look at TSA, they're probably going to get close to 2019 levels once we get into the summer, I personally believe. And secondly, we see the vaccination rates also going up very dramatically. Almost 40% of people have received at least one dose. I believe there's actually data that suggests 60+% of people have some form of immunity. So, and not to mention, there are mask restrictions that are being lifted. So there's definitely going to be a higher demand going forward in 2021. And we're getting some really great indications of that so far already, just in the first 3 months of 2021. So just looking at this past quarter very briefly in this press release, you can see that their numbers for Q1 2021 are already year over year much higher, but also quarter over quarter compared to the end of last year are much higher as well. You just look at cloud for some indication of continued strength in their business, and you can see it went from $3.8 billion to $4 billion in this quarter. When it comes to YouTube search, that is up over 50% year over year and continues to be higher. The demand for streaming, we know, is incredibly strong right now, with so many incumbents and new players as well when it comes to Netflix and Disney Plus, HBO Max. But also, I think a lot of people are just going more on YouTube. You even see in the older generation, I personally, anecdotally, I don't have the demographics off the top of my head, but maybe I could look that up for you. But you can see, in my personal opinion, a lot of older people are also starting to use YouTube too. YouTube ads as well, the more they can charge advertisers, it's becoming higher as well, because it's a more mature network. A lot more people on the platform, a lot more people with money to spend, and in certain categories, like personal finance, for example, where advertisers are really willing to put more money into it, because YouTube is so great in that you have so many different niches and so many targeted audiences that advertisers can work with. Last point on YouTube and their ads and engagement, I think it is really interesting what they have done with YouTube Shorts. Now, I have been seeing tons and tons of videos, at least on my personal feed, like 15-second clips when it comes to soccer or anime that I watch, and they have tons and tons of views, and it's just blowing up. And I'm thinking that's really going on, something interesting. And they have noted that this overall has gotten over 6.5 billion views collectively. They label it as a TikTok competitor. It might continue to generate more interest in YouTube overall, especially with the younger generation. So it definitely could be actually pivotal thing going on here. And with Google search, you see, again, because of those trends I mentioned with a rebounding economy, you are seeing strong results out of there as well. Strong growth year over year, over 30%. And so overall, this quarter was fantastic. Estimates were beat, smashed, and crushed quite handily, and $26 of EPS you rarely see a company beating EPS, which is essentially net income, by such a wide margin. Revenue beat was great, 10% beat, but the EPS to do almost 50% higher, or really more than 50% higher, right? 26 versus 15 and some change. That is, again, fantastic. And it goes to show Google in particular, out of the FANG stocks, definitely has really high margins and really high earnings leverage, right? Just a few more $1 billion equates to a really large amount of EPS. So earnings per share, as that continues to go higher and beat estimates, that's where you start to see the potential as far as the valuation, whether Google really makes sense at this price and at 3,000 or whatever your price target may be. There are also a couple of sleeping businesses in Google that could be interesting for the future. They have Waymo, which is their autonomous driving unit, and they have a health tech segment called Verily. As far as the balance sheet, and this is something that a lot of people don't know about Google, is they have one of the best balance sheets in the entire planet. They have over 300 billion in total assets. We're talking about over 130 billion in straight up cash and cash equivalents. So with that being said, and by the way, pretty minimal debt for the company. They could pay off the debt any second, but they have certainly a lot of cash to now go ahead and do an additional $50 billion share repurchase program as of this earnings release. So that is something that could continue to drive up the stock price as well. In the grand scheme of things, the size of Google as a company, 50 billion is it's not that much, but it's definitely something that helps at the end of the day. Now, before factoring in this earnings release, Google did have a pretty high PE ratio, but of course it depends on where you see the company going in the future. Like the forward PE ratio is something you want to especially pay attention to, and whether this company beats analyst estimates. Clearly, analysts don't know how to estimate Google, and they've gotten it wrong and wrong and wrong, but when you think about it here, Google has a PE ratio of 39, has a forward PE ratio of 28, and this is before factoring in this earnings. So when you factor in this earnings, I do believe it comes down to around a forward PE, probably around 25 or 26. And the analyst estimates for Google's earnings per share next year was around $82 per share, at least on finviz.com. I can tell you pretty obviously, right? If these trends are continuing, Google's profitability is at least the same level or higher, they're going to be able to do around $100 of earnings per share, maybe even more than that. Some estimates that I personally come up with here get to around $120 of EPS, right? If you kind of just do the math, you take this quarter's earnings of $26 and multiply by 4, that's kind of assuming they stay stagnant, right? Which they're not going to. Cloud is going to continue to grow, YouTube is going to continue to grow, and search is going to continue to come back, especially as travel demands go up and restrictions go down and people go back outside. Everyone's happy, happy, happy. Google is going to be especially happy. And companies are going to spend money on advertisement. So it could hit $100 or $120 of earnings per share. It's fairly reasonable to say Google should be trading at a PE ratio come 2022. So this is like an end of year target here. Come 2022, Google PE ratio of 25, earnings of $110, let's say at the midpoint of my estimates. 110 times 25 is 2,750. So that would be the share price, right? EPS times PE ratio equals share price. So 2,750 is already, I believe, is a pretty conservative number based on these earnings. If Google continues, you actually factor in some growth here. Maybe next quarter they do 28 EPS, they do 29, they do 30 EPS by the end of the year. Assuming there are no, one-time charges, or they get into some trouble, they pay some fines, then we have to adjust some of these numbers. But I see no reason why Google can't do 27, 28, 29, 30 earnings per share. So if you were to use those type of numbers or even higher, then we'd be talking about something like, for example, 120 EPS times 25. That'll put you at that $3,000 price target. If you think Google is going to be even more bullish or have a higher PE ratio as far as valuation, you know, sky's kind of limit here. I definitely could see 3,000 plus, and I don't think a lot of people, once they see those actual numbers, are going to question that. It actually makes a lot of sense for Google 3,000. So let me know your thoughts about this analysis in the comments down below. Like this video if you like Google. Even if you don't like Google, please like this video anyway. Until next time, my friends, stay well and invest responsibly.